Yep, Laurence, always great to have you back on ET Now. Thank you for joining us. Laurence, if I look at the world right now, equities as an asset class is at a multi-month high. Now, while other markets are in and around the 52-week high, India is the only big market which is at a lifetime high. So where does India go? It has already hit a lifetime high already a couple of weeks ago.
Yeah, I mean, the Indian trend from a longer term side, if you look at the Nifty, that breakout that you had early in the year around June when you got above the 19,000 area was significant, and we still got longer term targets of 22,800. In the near term, we have seen some slowing upside, which does suggest that we go through some kind of consolidation period. But ultimately, this consolidation pattern or sideways range that we get over the coming weeks should set the platform for the continuation of that original breakout and a move up towards that 22,800 mark.
So what is your 1 year price target for the Nifty? And what to your mind could be the bull case and the bear case?
Yeah, so we don't carry 12-month targets because we rely on the price action from the chart. So the breakout that we saw in July when we moved through that 19,000 area still gives us that 22,800 upside target. It doesn't give us a time horizon that we get within that, but that is the target that we focused on from that breakout. If I look at the very near term, we're consolidating above 19,100, 19,200, which is basically the bottom end of the range, to 20,200. So those are the more immediate levels to pay attention to within that original breakout that we've seen earlier.
Laurence, do you see Indian markets outperforming the global market like they've done in last 12 to 18 months?
Well, I mean, I think it's quite interesting because if you put the Indian market in dollar terms, it doesn't look as significant as if you look at it in local currency terms and then on a relative basis. But I think the key message from the longer term side is India, both in relative terms on a dollar basis, is in a longer term uptrend, as well as if you look at it in local currency terms. And I think it's about adding through these corrective phases that, in the short term that we currently see. So that longer term trend we think is intact and should sustain itself. And it's really about picking spots where to add new long positions.
But Laurence, what do you make of this divergence in terms of the outperformance when it comes to the mid-cap and small-cap space versus the large caps, which have been underperforming? Would you say it's getting a lot more frothy as far as the mid-cap world is concerned?
Yeah, absolutely. I mean, we had a great breakout in June, and the mid-cap index actually hit the upside target through early September. It's quite interesting that if you look at the 20-day moving average, had been a great guide for that accelerated trend in the mid-cap index. And then by mid-September, we started to test that 20-day moving average again. 2 weeks ago, we broke below it, and now we've seen some choppy volatility around it. So I do think there's corrective action in that mid-cap side as we consolidate. And I do think we've got some relative underperformance for the mid-cap space over the coming weeks. Longer term, though, anything closer to the 50-day moving average, you can re-look at engaging with the mid-cap index. But where it sits right now, we think that's in a corrective phase, and it's likely to underperform the Nifty itself in the short term.
Laurence, morning. Just earlier, we were debating what's really going to lead the Nifty Bank Index, if at all we do see a breakout. And a lot of the large caps haven't quite been performing. So do you think that what is going to lead to the breakout in the Nifty Bank is going to be the participation of some of these frontline names, or largely the fact that it's just been in a tight range and you need to see some sort of a decisive move on the upside?
Yeah, I mean, I think we're looking for a decisive move, but if I had to take a step back and see, what is the key driver for the banking sector from a longer term perspective, it's worth noting that the public sector banks are based out relative to the private sector banks just over 18 months ago. And that significant re-rating, we think, still lies ahead. So if we're looking at on a multi-month basis, we think that the public sector banks is still where you get more significant leadership within the broader banks sector, and that's a place that we'd continue to focus on to add to longer positions. State Bank of India is the biggest weighting within that. You've had a longer term breakout 18 months ago. You're currently in a consolidation pattern. I think ultimately that sort of leads and drags the broader banks index with it, but public sector banks is the key overweight position on the broader banks exposure.
Okay, so banking is of course one space that you like, but off late, Laurence, there's a big rally which is underway when it comes to the real estate stock. Is that a space that you track closely? And if yes, any stocks that stand out?
Yeah, I mean, DLF, you'd have to take away in a similar fashion to State Bank of India, had done nothing for roughly 8 years, broke out of a trading range 18 months ago. Most recently, it broke out of another 12-month consolidation pattern, and that's a real sort of stand of leadership coming through within the property space. And again, should continue to be one of the leadership stocks within the property sector.
Lawrence, within Indian markets, where are you convinced that a multi-year bull market cycle is started? Is it banks? Is it real estate? Is it PSU and defense? Where do you think that based on the charts today, these are just early days, and if you catch them now also, you're pretty much buying them at the beginning of their multi-year cycle?
So, I mean, banks have been a key leader for some time. And you can even go back post the GFC lows, being back in 2008, 2009, and banks have been a key driver to that. More recently, you've seen the infrastructure and property sectors breakout. So I still think banks are going to be a key driver. Obviously, just their weighting within the index. But the more fresh breakouts from that structural consolidation does come from infrastructure and property.
Okay, and Laurence, I was just going through one of the latest note of yours wherein you are recommending to take some profits in India, and some of the names that you highlight include Power Finance and IDFC First Bank. Any other names that come to mind as profit booking candidates?
Yeah, so I mean, it really comes out from that mid-cap space where we see the short term really extended and where you want to take profits and then reassess through the corrective phase. Those would be two of the names that really sort of stood out to us where you want to be reducing some exposure. You've got Max Healthcare on the healthcare side. You've got MRF on the industrial side. So a few of those names, having been leadership, are now in a corrective pause phase that I think you can rotate into some of the laggards, which is essentially coming from the RT space, which had been a big underperformer last year, and you're starting to see some improvements there.
Which names specifically in IT, Laurence?
Well, I think L&T Technology, LT Lantry is another one. Persistence is another name with high momentum, where I think you can rotate into and benefit from relative outperformance going forward.
The view on auto, and in particular the kind of breakout that we witnessed last year for the likes of an M&M. What's the view on Tata Motors in terms of the kind of trading range that it's been holding on to?
Look, I mean, autos have been one of the leadership groups early in the year. You've got a bit of dispersion going on in the performance of the stocks. For example, Maruti Suzuki's broken out with Hero Honda. So those two look interesting to be adding here. But if you look at Mahindra, for example, you've got slowing upside momentum, and that would be more of a take profit candidate. And Tata Motors is in a trading range currently. So be more selective in auto is the message that we would give, looking at the underlying stocks within the sector, and a bit of a pause at the broader sector level, having been a leadership sector early in the year.
There are a lot of sectors which have gone through multi-year consolidation, and one of them is consumer staples, HUL, to some extent Asian Paints, Pidilite, Tata Consumer. Is that sector getting ready for a big move?
From what we're looking at, no, we don't think that'll be a leadership side, and in fact think stocks are more likely to remain range bound within the staples. There'll be one or two that are improving, but in general, it's a space that I'd be sort of at weight or marginally underweight going forward.
Recent bounce in large cap IT stocks in India, is that a bear market? Is that a flash in the pan, more like a dead cat bounce, or IT in a sense has bottomed out?
So I think IT is bottoming out, but I think this is more of a tactical trade as you get a pause in the mid-cap and banking side, which is, I think, are key leaders longer term. I think you're getting some rotation into the lagging stocks within the IT sector. And you also got to bear in mind, at this time of the year, the seasonals are quite interesting in that there is a general tendencies for people to take profits in their winners as you get close to the calendar year end and allocate to some of the underperforming stocks, which sit particularly in relative terms when you look at the IT space. So I think that's more tactical rather than a structural longer term thematic.
Laurence, you talked about SBI, but the entire PSU banking space, do you see a bit of reversal in place? Because of late we have seen Quite a bit of profit booking there. Would you call it a bit of reversal, or is just consolidation and then we'll see another leg up? What's your view on the PSU banking basket as a
Yes.
whole?
So definitely think longer term leadership currently, like the Nifty, as we mentioned in our report, take profits of consolidation, same as the NSE banks, you're in this consolidation corrective phase. So we think that's more of the tactical pause and correction, but longer term, that's still where you're going to get leadership at the end of the day.
Next couple of months, what is your view on the volatility index, the global volatility index, given that geopolitical tensions in Middle East are surfacing up again? Do you think we could be in a stage of heightened volatility?
Yeah, so when we look at the VIX, which is not the global volatility index, it's based off the S&P 500, and where we see this sort of consolidating is around that 20 area. So it will be slightly elevated to what we normally see in a bull market, which is basically around that 10 to 15 area. And while we think it stays elevated around 20s, if you actually look at the performance of sectors, not only in the US, but globally, there's significant dispersion going on beneath the surface. So in the US, if you look at an index of the top seven stocks, it's in a clear uptrend. If you look at the Russell 2000 of the small cap stocks, you're basically approaching the October 2022 low. So you've got this massive dispersion. So the part of the market's in this sort of low volatility grinding uptrend, while the more volatile, more speculative shares are in downtrends and highly volatile. And that's why I think on average that VIX will be around the 20 area and be elevated to what you would typically see in a bull market of between 10 and 15.
Okay, Laurence, on that note, we let you go. Appreciate you making time for ET now.